Hey everyone, and welcome back to another video for today. So in today's video, I do want to touch on Coreweave buying a Core Scientific, why the stock price for Core Scientific actually went down today 17%, how that could impact a company like Applied Digital. Can we get a re-rating on companies like Iren, like Cipher, and the rest of them? We'll discuss all of that in this video. If you enjoy this type of videos, hit all the buttons, especially the subscribe one. We really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now, as you can see right here, Coreweave is a company worth around $79 billion, generating $2.71 billion in revenue over the past 12 months. As you can clearly see here, over the past 3 months, this stock is up 218%. And actually, since the lowest point, because they did go public, since the lowest point, they're up around 4x. Now, the big announcement today was this: Coreweave to acquire Core Scientific. A leading data center infrastructure provider today announced that they have signed a definitive agreement under which Coreweave will acquire Core Scientific in an all-stock transaction. Under the terms of the merger agreement, Core Scientific stockholders will receive 0.1235 newly issued shares of Coreweave Class A common stock for each share of Core Scientific common stock based on a fixed exchange ratio. So yes, dilution here for Coreweave. Following Coreweave's successful IPO in March 2025, this acquisition will help Coreweave verticalize its data center footprint to future-proof revenue growth and enhance profitability. Through this acquisition, Coreweave will own approximately 1.3 gigawatts of gross power across Core Scientific's national data center footprint, with an incremental 1 gigawatt plus of potential gross power available for expansion. The acquisition accelerates our strategy to deploy AI and HPC workloads at scale. That's the CEO of Coreweave saying. Verticalizing the ownership of Core Scientific's high-performance data center infrastructure enables Coreweave to significantly enhance operating efficiency and de-risk our future expansion, solidifying our growth trajectory. Owning this foundational layer of our platform will enhance our performance and expertise as we continue helping customers unleash AI's full potential. Now, the details of this deal were a bit confusing at first, right? We were live with Jose and we're like, okay, this is quite a strange deal, because if they're paying this amount of money, why would Core Scientific stock be down? Well, these are the details. So the transaction is expected to close in the fourth quarter of 2025, subject to customary closing conditions, including regulatory approval and approval by Core Scientific stockholders. Upon closing and under the terms of the agreement, which has been approved by the board of directors of each company, Core Scientific stockholders will receive 0.1235 newly issued shares of Coreweave Class A common stock for each share of Core Scientific common stock held. As of July 3rd, 2025, the agreed upon exchange ratio implies a total equity value of approximately $9 billion. By the way, Core Scientific at the moment is worth $4.4 billion. This is calculated on a fully diluted basis and based on Coreweave's 5-day volume-weighted average price. This represents a $20.40 per share value based on the closing price of Coreweave's Class A common stock as of July 3rd, 2025, and a premium of approximately, back then, 66% on Core Scientific closing price of $12.13 on June 25. The final value will be determined at the time of transaction close. And so this is the main issue here. We're going to, of course, talk about the financial impact, but the main issue and the reason why the stock went down is that, well, it seems like the market does not believe that Coreweave will be worth around $80 billion by the time this deal closes. And of course, if Coreweave is worth less, right? If Coreweave is suddenly worth $100, $80, then of course, the value for Core Scientific will be closer to the value that it's at right now and not the value that you think you might be getting, right? Far from the $20 per share value. Okay, so that's basically what the market is thinking about right now. Now for Coreweave, I think this is still a very, very good deal. in my opinion. Vertically integrated makes sense. Plus, this is very important. The first point here, immediate elimination of over $10 billion of cumulative future lease overhead to be paid for existing contractual sites over the next 10 years. So let's say the total equity value here is $9 billion. Well, they're eliminating here over $10 billion of cumulative future lease overhead. Pretty good, in my opinion. Point number 2 here, including the elimination of the lease overhead, this deal adds $500 million of estimated fully ramped annual run rate cost savings by the end of 2027 through streamlined operational focus. There's also a potential to repurpose towards HPC usage or divest crypto mining business over the medium-term horizon. Okay, very crucial here because, of course, as we will talk with the other players here, most of them are still in the crypto or the Bitcoin mining business. Now, Clear Street here said the following: they see positive read to others in space on Core Scientific deal value. So after Core Scientific announced an agreement to be acquired by Coreweave in an all-stock transaction, Clear Street Analyst calls the deal a major vote of confidence in Coreweave Scientific's infrastructure strategy, as well as a validation of powered land as a high-value asset in the AI compute stack. The firm views the deal valuation as a potential read-through for Riot Platform, Cipher Mining, and Hut 8, the analyst added. The firm has a buy rating and $20 price target on Core Scientific, noting that shares are down approximately 20% or down 17% at the close, which it attributes to investors' concerns that Coreweave may trade lower by the time the deal is completed, reducing the effective value of the all-stock transaction. Now, I do want to remind you what the analysts are expecting Coreweave to do in the next coming fiscal years and Core Scientific. So, Coreweave in fiscal 25 is expected to grow revenue by 163% to over $5 billion, then another 130.9% year-over-year growth in fiscal 2026 to generate $11.64 billion, and then to grow another 42.5% in fiscal 2027 to reach $16.58 billion in revenue. Then as for Core Scientific, in fiscal 25, they're actually expected, growth to be down 16.3% year over year, but then it's expected to more than double in fiscal 2026 and then grow another 35% in fiscal 2027 to reach $1.16 billion. So when you see this, you might say, actually, maybe Coreweave just bullied Core Scientific in this deal. Maybe they just said, look, you have no choice, right? You have to go with us, or otherwise we'll go with other players. And yes, even with our agreement in place, we don't think you're going to survive in the long run. And that's how they basically reached this agreement. Just speculation here from my part, but it does seem like, yes, Coreweave is becoming very, very big, very, very important here. Remember, they are very, very close to NVIDIA. And so if they can vertically integrate, right, if they can offer the best GPUs, the newest GPUs out there, if they do have such capacity if they do have the GPUs and they do have the energy at a very, very good price, then of course they'll be able to grow much faster than all the rest. And this leads me to the other players. First up, a very small player here called Cipher Mining. Cipher Mining is actually expected to grow also very, very rapidly in the coming fiscal years. Revenue is expected to jump 85.6% in fiscal 25, then another 48.2% in fiscal 26, and then another 43.6% in fiscal 27 to reach close to $600 million in revenue by fiscal 2027. And for context, this is a company worth just under $2 billion. So on a price to sales ratio, you're not paying that much. Of course, I don't think there are many analysts that are covering this company, so take these expectations with a grain of salt. Moving on to a more popular name, maybe more established name here, is Applied Digital. Now, Applied Digital, what's interesting here is despite all the attention that it's got because of the link with NVIDIA and of course the big deal with Coreweave, which we're going to touch in a bit, as you can see, in the current fiscal year, they're only expected to grow revenue 33.1%. Then in fiscal 26, only 7.8%. And then in fiscal 2027, that's when we are going to see the huge increase, an increase by 115.9% to reach $513 million. Now, for those that don't know, a month ago, they announced this. Applied Digital announces 250 megawatt AI data center lease with Coreweave in North Dakota. So, Applied Digital, a designer, builder, and operator of next-gen digital infrastructure for HPC applications, has entered into two approximately 15-year lease agreements with Coreweave, the AI hyperscaler. Under the lease agreements, Applied Digital will deliver 250 megawatts of critical IT load to host Coreweave's AI and HPC infrastructure at its Ellendale, North Dakota data center campus. Over the approximately 15-year term, Applied Digital anticipates generating approximately $7 billion in total revenue from the leases. That's around $466 million each and every year from just this one deal. So they said the following thing. Applied Digital expects the first 100 megawatt data center for Coreweave to be ready for service in the fourth quarter of calendar 2025. The second building, which is expected to house a 150 megawatt data center, is currently under construction and is expected to be ready for service in the middle of 2026. Additionally, Coreweave holds an option for the third 150 megawatt building, which is currently in the planning stages, anticipated to be ready for service in 2027. Applied Digital's Ellendale campus is designed to host 400 megawatt of critical IT load. Ellendale has over 1 gigawatt of power capacity currently under various stages of load study, allowing the campus to expand its power capacity to support additional AI and HPC data center infrastructure development. Of course, that last part is great to hear, but it will only have an effect on the business or the stock whenever Applied Digital will say that, look, we're going to build out more and more and we'll have X amount of megawatts or maybe a gigawatt available to us. And so, of course, when that deal was announced, as you can see right here, the stock basically went from around $7 and in a matter of a week or so, it closed at around $15. Now, since then, the stock has gone down, well, as you can see right here, from $15 to the close of today. So it went down around 37%. We're back under $10. And of course, you see this red candle right here on the day that, well, Core Scientific gets acquired by Coreweave. And you might say, interesting. On the one hand, Coreweave and Applied Digital still have that 15-year deal, right? Okay, so that's great. On the other hand, you might say that, okay, they have that one deal, but now that Coreweave might and will acquire Core Scientific in Q4 of this year, maybe that's just going to stay at one deal and that's about it. They won't need Applied Digital anymore in the future. I'd say, yeah, maybe that's the way the market is thinking about it right now. But remember, Coreweave is not the only player here, right? There is just so much demand. So even if Coreweave is going to acquire Core Scientific, even if that's the case, yes, Coreweave does become now a formidable player, right? Also a competitor here. But there's just so much demand. And when there is just so much demand, I don't think there is going to be that one specific player that wins it all, right? Because that one specific player does not have all of the energy available for everyone, okay? It just doesn't happen at the moment. If we were at the end of the cycle, then I would say, okay, fine, game over. But right now, I don't think so. Moving on to another player, and that's a player that we did talk about last week, and of course, a typical couch touch here, just kidding. But yeah, the stock did go up another 20-25% or so since the last video. And this one actually was green today. It was red at first, and then it followed and ended the day green, and that's Iren. Also, one of those Bitcoin miners that do want to diversify their business at the moment. Now, looking at Iren right now and see what the, select analysts are expecting this company to do. We can see that, solid growth over the last couple of years and still expected to grow 166% in fiscal 2025 to reach $500 million in revenue. Then that growth is expected to decelerate quite rapidly, 75.5% in fiscal 26, and then just 10% in fiscal 27 to reach $968 million in revenue. Now, what's interesting here, and by the way, for those that don't know, Iren is a vertically integrated data center business powering the future of Bitcoin, AI, and beyond, utilizing 100% renewable energy. Strategically located in renewable, rich, fiber-connected regions across the US and Canada, Iren's large-scale grid-connected facilities are purpose-built for the next generation of power-dense computing applications. So they say here a couple of things. Power and land portfolio, they've got 2,910 megawatts of grid-connected power secured across over 2,000 acres in the US and Canada, with an additional multi-gigawatt development pipeline. 810 megawatts of operating data centers underpinning three verticals: Bitcoin mining, AI cloud services, and AI data centers. As for the Bitcoin mining business, they've got one of the world's largest and lowest cost Bitcoin producers with 50 exahashes per second of installed self-mining capacity. They are delivering high-performance cloud compute to AI customers with next-generation NVIDIA GPUs, but that still is a very, very young business at the moment. And then the last one here about AI data centers: end-to-end design, construction, and operation of data center infrastructure tailored for AI workloads, with up to 50 megawatts of IT load liquid-cooled capacity scheduled for delivery in 2025. Now, they did give us a monthly update here for the month of June. So, as I said, 810 megawatts of data center capacity that generated $68 million of total revenue, $16 million of total net electricity cost, $51 million of total hardware profit. And by the way, June was a record monthly revenue and hardware profit. They have now their installed 50 exahashes per second of hash rate, which is, well, their cap has been achieved. They have a total of 4,300 NVIDIA GPUs. They've also announced, I think a couple of days beforehand, that they expanded their AI cloud with 2,400 Blackwell GPUs, which were the B200 and B200. They've, of course, had the $550 million of convertible notes offering that was oversubscribed. So those were the numbers here for June. Now, if you annualize that number here, that $68 million, you get $816 million, which, as we've seen before, they are expected to reach $880 million in fiscal, or for the whole of fiscal 2026. And as I said a couple of days ago, they said the following: they're expanding their AI cloud with 2,400 NVIDIA Blackwell GPUs. The new B200 and B300 fleet lifts the total to 4,300 GPUs, unlocking next-gen training and inference at scale. The purchase is fully funded from existing cash. However, Iren is also evaluating a range of financing alternatives to support its AI cloud service growth. And of course, with all of these smaller players, don't be surprised when you get diluted along the way. Now, the mix of the 2,400 were as followed: 1,300 of B200 and 1,100 of B300 GPUs. Those will be installed over the next coming months at Iren's Prince George, BC campus, with any displaced mining hardware expected to be redistributed to other sites. Iren expects the deployment to deliver attractive risk-adjusted returns on a standalone basis, while simultaneously supporting active discussions across its AI data center business. Iren's vertically integrated platform, underpinned by the 2,910 megawatts of grid-connected power, is uniquely positioned to deliver powered shells built to suit turnkey colocation and fully managed cloud service, providing customers with flexible end-to-end solutions across the AI infrastructure stack. This investment is compelling on two fronts: strong near-term economics and meaningful strategic positioning. Expanding their Blackwell footprint not only enables them to meet current customer demand, it also supports the broader infrastructure conversations driving their next phase of growth. So here again with Iren, although the stock has definitely run up quite significantly, right, especially since the April lows, but I'm not even going to go that far. Even if we go only 2.5 weeks ago, that stock was under $10. So it's up, 70% or so in a matter of weeks. Of course, in the anticipation that this could be the next big thing, right? This could be another one of those companies that could potentially get a huge contract, right? It's possible. Or it might be another one of those companies that might get acquired. And so to me, all of this is very interesting. Of course, I do not hold a position in any of these companies at the moment. I did talk about it with Jose during the live streams. We might go long, very small position on Applied Digital, maybe even Iren as well. A very small position, and see where that goes, because the potential here is huge, right? Especially when you start with such low market caps, and well, the contracts, the budgets here are worth billions of dollars. Then yeah, maybe having a tiny position in it and it potentially 10xing in the future could make sense. I know there are a lot of you that do own one Coreweave or even Iren or maybe Cipher, and definitely some of you do own Applied Digital. So let me know what your strategy is going forward. All of that in the comment section below. Like, subscribe, do all of that, and I see you all in the next one. Bye-bye.